Are energy stocks heating up again? And if so, what's the best way to cash in on them? That's what we're going to dive into in this video today. So we're going to do a little sector analysis on energy stocks. And we're going to start things off by looking at XLE. That's the energy sector ETF. That's actually the chart I have in front of me right here. And from there, we're going to look at some sub-industry groups that have my attention. So we're going to look at solar stocks, we're going to look at uranium stocks, and we're going to look at coal stocks. And for each of those groups, I'm going to share a few of my favorite charts that I'm watching within those areas of the energy complex. But before we get into the good stuff, I want to welcome you in case you're new to the channel. So my name is JSpit Trades. That's my YouTube name. It's also my Twitter name. So this is a little snapshot I took of my Twitter. So you can follow me over there. If you don't already, I share charts, market analysis, the occasional meme or two on Twitter. So I think we have a lot of fun over there. So if you don't already follow me, I suggest you do, but enough of that stuff. Let's get into the stocks. That's why you're all here. So the reason I wanted to talk about energy stocks today, and the reason I wanted to put together this video, is because over the past month, energy stocks have returned about 6.5%, and that makes them the fourth best performing sector over that period. And the reason that's notable is because for much of this year, energy stocks have been dogs. They've been laggards. I think energy is the second worst performing sector in the S&P 500 this year, and I actually think energy is still down slightly on the year. So the fact that we're starting to see energy stocks show more signs of life is encouraging. And I got curious after learning that, because if you've been following me on Twitter, or if you watched some of my previous videos, you know a theme that I'm looking out for as we head into the back half of 2023 is possible rotation. So rotation is when money rotates out of the strongest sectors and industries into areas of the market that have been underperforming as a way for them to essentially play catch up. So that's what I'm looking out for, and had me, curious, and led me to do a deeper dive into energy stocks. And when I look at XLE, I gotta say, I'm not yet super bullish when I look at XLE. So when I look at the sector ETF, there's nothing about this chart that has me particularly bullish. It looks just like a choppy range. At first, I thought you could see there's actually a series of higher lows. I thought this was a topping pattern for energy stocks, but based on the recent strength we've seen in the broad market and other areas of the market that have been playing catch up lately, I actually think this is just consolidation before energy stocks eventually move higher. But when you compare it to other industries or sectors in the market, I just think there's other areas that are stronger than your traditional energy stocks right now. Because when I look at XLE, it's sort of a range bound mess at this point. So I think what's going to need to change before we get really excited about your traditional oil and gas stocks is you're going to need to see some strong performances out of the bigger, larger energy stocks, and that'll have. If that happens, then I'll get more serious about putting a lot of money to work in some traditional oil and gas stocks. But as of right now, I think there are easier ways to make money in the stock market. That being said, there are other areas within energy that I think are offering some much better opportunities right now. And the first area within energy that I want to discuss is solar. So if you followed me on Twitter, if you've seen some of my previous videos, this is a chart I've shared before. It's basically a giant wedge pattern that's been forming on the solar ETF TAN. And I actually was starting to get bullish on solar stocks up here. I thought we could potentially break out, but we pulled back and actually came and tested the lower bounds of that wedge pattern. And we're starting to find some support there. For me to get particularly excited about TAN, I want to see it reclaim its 30-week moving average. It's just reclaimed its 10-week moving average, but 30-week moving average is up here. So it might need another week or two before that happens. But I'm encouraged by the fact that this hasn't broken down and is just continuously getting tighter within this wedge pattern. So I think a big move is coming for solar stocks. But if that move does happen, the best way to take advantage of it is not necessarily through TAN. It's through owning the best solar stocks within the group. So that's what we're going to look at now. So we're going to look at three of my favorite solar stocks. The first one is ARRY Technologies. Again, if you've been following me on Twitter, this is a chart you've probably seen me share before. So the reason I like it is because it just has this massive bottoming pattern. It's a little wonky and a little messy, but it has all the ingredients of a inverse head and shoulders pattern. And so since bottoming in May of 2022, we had that big move up, and we just basically since last August have been consolidating in this range. And I think Array Technologies is starting to wake up here. You can see during the past couple of weeks or past 2 or 3 weeks, we had a pullback into this 30-week moving average, and buyers stepped in. And more recently, last week, we reclaimed that 10-week moving average. So we're starting to press up against the higher bounds of this range pattern here. So I think this is a stock that's definitely on breakout watch. So that would be probably my #1 solar stock to watch right now, just because of what I'm seeing in its longer term setup. It's starting to look really, really constructive. And honestly, it's about damn time that this thing broke out. So that would be Array. The next name that I want to discuss is Canadian Solar. Again, a familiar name for those who've been following me. I've covered this before on Twitter and in YouTube. And what I like about it is just it has this massive cup and handle pattern that's been forming. So you can see the initial base was built out here. Then we had a strong breakout, powerful move up. We pulled back, consolidated. We've really digested that explosive move higher. And now we're starting to look more constructive. So we have some, dating back to May of last year, we started to put in the characteristics or attributes of an uptrend. So you can see we have some higher highs and higher lows, and we're starting to reclaim those key 10-week and 30-week moving average. So what I'm looking for out of this one is just, just to keep pushing and kind of resolving higher and come up and test these key levels here. So I think Canadian Solar, in addition to Array, is definitely on breakout watch. Another name that I'm watching. So this is actually one of the stronger solar stocks for until May. So this is First Solar. So you can see that it had its big move. It broke out to all-time highs. And then the past few weeks we pulled back, and I was actually getting a little concerned about First Solar. I thought, this might be losing steam, might be losing momentum, and I thought it might be at risk if it lost these lows here for rolling over. But we were able to put in a higher low here, and I think what might happen at this point is just a little sideways action before we get going again. I'm encouraged by the fact that this 30-week moving average is acting as support, and we're no longer falling. We didn't set a lower low on the weekly, so that's overall encouraging. So First Solar would definitely be a name to watch if just the broad group of solar stocks starts to get more constructive and starts to show some good strength. So those would be my top 3 solar stocks. Moving along, the next area within energy that I want to discuss is actually uranium. So again, a topic that I've covered before. My regular followers or people who pay close attention to my content know I'm particularly long-term bullish on uranium as a long-term speculation. And the reason is when you zoom out on URA, you could just see that it was massive. Basically had about a decade-long bear market that we bottomed during the COVID crash. And since then, we've had just, a change of direction type move. And so we had this explosive bottom off the lows, and then we've just been, consolidating and digesting that big move higher. And I'm starting to think uranium stocks could wake up in a big way here. We actually had this, breakout attempt and couldn't quite stick the landing on the first attempt. We pulled back and just might need a little bit more time for URA to get going, but I'm not particularly concerned that this was a false breakout that's going to lead to uranium stocks, crumbling. And the reason I say that is because the 2 leaders within the uranium space that I'm watching are holding up quite well. So this is Cameco. This is the strongest uranium stock that I'm watching right now. It's also the biggest and most liquid. So in that way, if you just think about, in terms of risk, I think it offers a pretty good risk to reward ratio because, it's not like you're going, way out in the risk curve and buying, a really, really tiny uranium stock. This is by far the biggest uranium name. So, by that logic, it should be the safest in my opinion. But when we look at the technicals, it's even stronger than what we saw in URA. It has essentially been consolidating, but it also within the context of an uptrend. So unlike URA, which is was more or less spent several months trading sideways, the consolidation accumulation pattern in Cameco was within the context of a larger uptrend. So overall, really good stuff on the weekly. You can see we broke out and stuck the landing much better than what we saw with URA, and we actually pulled back into this rising 10-week, and buyers stepped in. So overall, this is looking really constructive. I think it's just consolidating that initial breakout, but overall, everything I'm seeing leads me to believe we could see much higher prices for Cameco in the future. The second uranium name that I want to discuss is actually the second biggest publicly traded uranium stock. So this would be NextGen. And similar to Cameco, it broke out and was able to stick that landing. So instead of having a sharp retrace, it is just basically spent the past few weeks consolidating. So I think this one's looking very constructive, and I like the fact that it is larger. I think it's about actually don't quote me on the market cap, but I want to say it's about a $3 billion market cap or $4 billion market cap. And it's the second largest and most liquid uranium name. And I think where we are at I think we're still very much in the early innings of a uranium bull market. So I don't think you need to go really far out the risk curve right now. You can just stick to the leaders because we're still in the very much the early stages. So there's no point in my opinion, in taking on a bunch of extra risks. Just buy the leaders right now. Keep it simple. So that's how I'm thinking about uranium stocks. The last area within energy that I want to cover today would actually be coal. And I know a lot of people don't get too excited about coal. There's probably a lot more people who are excited about the long-term prospects of solar stocks and uranium stocks. But I like coal stocks just because I think it's a cool contrarian play. These stocks are actually have incredible fundamentals, and because they're hated, a lot of people have given up on coal stocks. They trade at really attractive valuations. But that's the fundamental side. That's a fundamental argument for coal stocks. When we look at the technicals, I'm also seeing three coal stocks that look really, really good right now. So the first one would be CONSOL Energy. So you can see after this initial, move up, this really powerful rally that it had that lasted, essentially, let's choose here as a starting point. That lasted from November 2020 to last August. This stock rallied 2,000%. So just a tremendous move. And after a move like that, you'd think it would, give back all those gains, but it's actually just been consolidating and continues to look really constructive, and it is actually holding this key level here. So CONSOL Energy is looking really, really nice for continuation. We've already reclaimed the 10-week and the 30-week moving average. So I really like how this energy or this coal name is shaping up here. The next name I want to discuss is AMR. So pretty similar setup, big, powerful move off the lows. But instead of giving that entire move back, which is what we saw happen with a lot of growth stocks that had huge rallies off the COVID lows, they just, they entered deep bear markets and gave back a ton of those gains. These coal stocks have just made these big moves up, and they're just been consolidated and starting to look really, really constructive over the past few weeks. You can see we're back above the 10-week and the 30-week moving average. So if this can, continue to bump up against these all-time high levels here, I think we could see a big breakout for these coal stocks. So that would be AMR. The last name I want to discuss is Warrior Met Coal, and it's a very similar story. Big explosive move off the lows, and since then it's just been consolidating, trading sideways, and it's starting to wake up in a big way. You can see HCC Warrior Met Coal has actually greened the past 6 weeks. So a sort of a change of character move taking place here, and we've also reclaimed in the process the 10 and the 30-week moving average. So overall, looking really constructive. I know coal stocks aren't the sexiest names, but as we saw with CONSOL Energy, if you get the timing right on these names, these stocks can deliver gains just as big as any growth stock or AI stock or anything like that. They can really get moving. So they make good speculations in that sense and trading vehicles. But that's it for today. I hope you found this video informative.